All right, Kevin, it's Friday, March 29th for that date. I'm going to start with the lean hogs. We did settle just below that 92.20 formation on the weekly chart. If we settle below it today, there's a question as to whether this thing will continue or not. Although, as I was telling you, obviously I have a mixed opinion on this. Is this an aggressive buy pullbacks area, 87.45 to 88.70 now? I think we're going to get there next week if we close today below 92.20. Um, you know, I think it's worth a shot. I don't know if we're going to be watching or rather trading lean hogs, but I mentioned in the newsletter weekly containment only. Weekly settlement below 92.20 does allow the lower 70s, 72.25 to 73.30. Say by June expiration. So that's consistent with this run up, this church steeple rally, giving it all back. And closing below 88.70, which is the speed line, would only add fuel to that downside, route. Anyway, closing above 92.20 today for the week itself, we maintain a constructive dynamic through April and even through spring. So I'm not going to say any more about that. Let's go on to the live cattle spread. I know we had an offer in there today. We're still at around 335. That's our resistance, below which, 177, 1.775 is the 3 to 5 week target. Could get down there sooner. If we close above 335 today, we should see at least 4.675 within a week or two, and quite possibly the mid, uh, well, not mid, it's 5.225. Say within 3 to 5 weeks, that's possible. So big pivot point here, 3.350. And feeder cattle, we bounced here today just a bit. Did we close up on the day? Yeah, we did by just a hair. That we came very close to testing that support. 148.57.65 was the low. We do need to settle above 151.42 to turn this sucker north into next week. And if so, we should retest that 155.35 high by the end of next week. And in fact, holding above 148.57, as you're well aware, maintains a bullish dynamic through spring with higher trade expected. And you know all those price targets. So a settlement today below 148.57 would have the opposite effect. And at this juncture, let's pull that feeder cattle up weekly. Boom. There it is. 138 handle. We closed today below 148.57. We're looking for the upper 138 handle over the following, I'd say 3 to 5 weeks is realistic. All right, so big pivot point that we're at right now in feeder cattle. Let's take a look at June live cattle. We are approaching this 117.40 to 118.55 area. I know you're familiar with this. It's rising gradually. 117.40 is the primary. That is the multi-week containment, and that can contain selling, into June expiration. And inversely, if we settle below it, the market continues south into the 112 handle within 3 to 5 more weeks. August live cattle. Same thing. We have a speed line at 115.77, but primary channel support at 114.40, which once again can absorb selling into summer trade on this particular contract. And so that's a good sort of stick your neck out area at 114.40. If you wanted to scale into something, calls, um, I'm not quite sure if that's a call spread perhaps. Buy a call spread, buy another one with upside confirmation, like a 115 or a 114 to 120 spread, perhaps. I don't know. I'm not sure what's going on with the premium. You need enough premium up there in the 120 to sell against in order to make that spread cheap enough to buy. Anyway, there's that. And ethanol, RBOB came back a bit today. After testing channel resistance and channel resistance, both weekly, two very different channels. You're familiar with this. We're still in reach of this 17701. Although nice rally today, we're right in the middle of the channel range, if you will. So we could just as easily test this low to mid 90s as we could this upper 70s support. This is the more significant, below which I've been saying this market is prone to failure into later spring. Crude oil, same picture, really nothing real different here. We had a higher volatility day today in crude by a slight margin, I suppose. That 58.16 did hold, can contain selling into next week, and in fact above which this long-term resistance area remains in reach over the next full week of trade, where once again we can top out through spring, and once tested the market then vulnerable to bearish rotation into the upper 40s within a few months. Closing today below 58.16 does indicate 56.33, which is our primary near-term support, can contain selling through next week, and in fact above which that 61.67 to 62.15 area remains a 2 to 3 week upside target. And a settlement below 56.33, not going to happen today, but if it did, the market could actually slip back into the 46 handle over the next 3 to 5 weeks, where we find long-term support with an ascending 2/3 speed line projected off the 2016 low. I'm not even going to mention corn. Well, I'll show you why I'm not going to mention it, because we're in the middle of, we're right in the middle of no man's land. Nothing doing here at 374 even settlement, 65 support, 84 resistance, right in the middle of it. Weekly containment, both areas. Would be more favorable to sell 84 1/4 than I would buy 65 3/4. And inversely, a settlement above 84 1/4, that's a good go long signal into the upper 390s. Soybean meal recovered a bit today, but it's still negative below 311.6. We close at 306.5, holding below 311.6. We should get to this channel base here, say by the end of next week, where we should bottom out on a weekly basis. Overall, this is a market that remains bearish below the mid 320s and prone to testing the upper 280s. Hard to say what the timing is on that. We've got to settle below this channel bottom first to reach 286.9. Long-term trend line off these lows that go back to 2016, where we could get a nice bounce for a month or two perhaps. And a settlement below that, long-term support then expected within a month or two at 260.3. All these downside levels are attainable by the end of summer, holding below the mid 320s. But we're not going to get to the mid 320s until we settle a day above 311.6. And I could be talked into buying one if we settled above 311.6. Soybeans. We're getting close to a channel bottom here. I'm not crazy about buying it, although in hindsight, we may well say that it held the April lows, say at some point next week. Overall, 857 1/4, I think, is the big area that we could buy into, buy calls down here when we get down there, if we get down there. On the other hand, a settlement above 911 1/4, and I'll show you this because I like it. It's so textbook. It's worth playing if we're interested in a 2 to 3 week. Here we go. Watch me fix this. There it is. I just learned a new trick with CQG. I don't have to resize these. I just condense it. Here's 311 1/4. Right here. Close above that. We head up into that low 940s. which you can see right here, 940.5. So closing above that 911.25 formation is bullish into later April. And I could be talked into buying this market with a settlement above. I think that's pretty classic. Wheat, take a look, I guess. We're out of this now, and I'm glad we are after what happened today. We still have this overhead resistance, 454.75. I'll show you that. You know, I'm not really crazy about playing anything in here until we either get back in the low 430s again. There it is, 454.75. We settled below this. If I were an aggressive near-term, short-term trader of wheat, I would sell this market with a settlement below 454.75, expecting a retest of that 431 long-term support. That'd be a good 20-cent downside play. This area I should probably upgrade this to weekly, because truly it could contain selling through next week, and then once we test that, we could then reach to this 1/3 speed line at 481.75. And so that is the start of a wide range of long-term resistance. The low $5 area still stands out as our primary resistance, and we're not anywhere near to testing that in the next few days. S&P, I probably should have pulled up the weekly chart. It is grinding up overnight. If we settle above, and not by just a point, the high settlement was 28.30. This channel top is 28.29.5. So that area settled above on Friday is bullish. You know, I've been thinking, how will that impact the bond market? I don't know if it will at all. You know, these things sometimes are correlated and other times not. You can have a bullish stock market and a you know, obviously a downtrend in interest rates. In fact, that even makes sense if you think about it. But the downtrend in interest rates right now, and they're pretty low to begin with, is more based on supposedly, you know, recessionary information. So I don't know how to play all that, but I'm not going to pay close attention. How do I put this? If we close above 28.30 today, that bullish signal in the S&P, I wouldn't convince me to get out of that long call in the bonds. I think that would be, and let's go look at that right now. I'll give you that number tomorrow. Kind of just trading sideways here. So I've got this short-term channel bottom, which is at 149.10 tomorrow. And this weekly channel formation is, I believe, at 149. This is channel 1-2. Channel 1-2 is 149.07. So we really want to settle above 149.10. If we settle below 149.07, that doesn't look great for sure. I think we would just get out of this and take a small loss. Weekly, come on, daily. There's the daily. 30-minute, 30-minute. Damn it. Well, you know, this is the problem. Gets all messy in here. I'll just reconstruct the damn thing, I guess. So, that's not it. There it is. So the daily formation is at 149.04. So I think we'd have to settle below 149.04 and then just bail out of that call and have another fresh look at it in the coming days and weeks. Until then, I like being long this. This is the daily chart. We settled negative near the lows. You know, we'll see what happens tomorrow. End of week, settle above these channel formations. I think it looks good into April. Let's jump into some of these other markets. Take a look at the Canadian. Just kind of sitting here in the mud here for the last few days. Resistance says 75.29. Yeah, that's today's level. And below which we should head down in the 73 handle here in the next week, 2 or 3. Take a quick look at the euro currency, see if we got anything. Euro broke. Got in that 115 area last week, selling off. We settled below this 5/8, and it continues to look weak into April and even through spring, or the second quarter, I guess. Take a look at the British pound. Still a lot of Brexit crap going on, but nothing to do here until we settle below this channel formation. And I don't see that happening tomorrow. Gold, that's right. We're in gold. I forgot for a second. Come on, you. Condense. There it is. All right. Tomorrow's number is 1307.5. As long as we close below that formation, looks good. We do want to get below this upper 1280s, 1288.3, 1287.5. Just call it 87.88. If we can close below that tomorrow, for instance, well, we'll see this channel bottom pretty quickly within 3 to 5 days as it closes in on the speed line. So this is kind of our target zone here. Monday it'll be 1257 to 1267. It's a dime narrowing into later next week. That's our target, and we do want to see a settlement, obviously, sooner than later. Otherwise, we could do some consolidative crap in here, and then we'll have to scratch our head, you know, because this channel bottom is rising and is rising away. So, we'll obviously, I'm sure we will talk about that. We don't want to take more than a $400 loss on this thing, though, and I think that could be. I don't have that off the top of my head, actually. I know we've got a. I can't remember. Is it a 1270? 1270 call, so it's out of the money. Anyway, we'll talk about that tomorrow, but you've got the numbers here. See if silver sold off at all. Yeah, it sure did. Silver may settle in a sell signal by closing tomorrow below 15.024. It closed at 15.02 even on Thursday. So a little lower, you know. We can get down in the 1480s tomorrow. That looks good. I take that because that should mean that our gold put is working in our favor. So we'll watch that as well. Copper weak? No, it's not. Interesting. It's actually kind of rejecting this sign of weakness. We'll keep an eye on that. NASDAQ, what's it doing? I don't think it's going to test this tomorrow, but you never know. That would be our buy signal, and we can look at calls. If we settle the week above 75.42, until then the market's prone to weakness. And we'll finish this out with a quick look at sugar again. Nothing going. Weekly chart, of course. Cocoa, a little higher, but there's our resistance here. Close above it, we could consider getting long somehow, some way. I'm not acquainted with cocoa pricing and all that good stuff. Coffee has a cotton in it as well, if I recall. There's the cotton. Cotton backed off. Weekly chart. So there's our support. I don't think we'll see that today, Friday, but we may see 74.38 next week with a settlement below, tipping this market south. It does remain weak below this area, so, you know, is this a go with for us? To the downside, if we violate this, we could talk about that. I'd rather sell into this area on strength. And let's continue with coffee. Same as yesterday, really unchanged. And that is, that's about 20 minutes there. I know I kind of move a little fast. Some of it was a lot of repeat. I'm trying to think. We were working the spread in the cattle. I know that didn't get filled. We are long a gold put and long a 30-year bond call. And I'm sure we'll talk about those in the morning. All right. Have a nice evening. I'll talk to you soon.